The content on this channel is for informational and educational purposes only. Please contact a professional when it comes to your financial needs. Your biggest wealth generator is a home, owning property. But since 2019, there has been increases in the insurance rates of every homeowner in America. Here in Georgia, since 2019, that insurance rate went up 36%. Year over year, that means from 2024 to now, it was 12% increases. What's driving this? Well, we're going to get into that right here, right now on the Ujamaa Network. Let's get to it. The average mortgage in America consists of four basic pieces. You've got your principal, your interest. You also are going to be responsible for your property tax and insurance. No lender really is going to loan you that money without some type of insurance protecting their investment, which is the structure itself. Now, of those four pieces, you can negotiate after the fact what you're going to be paying in insurance, because that is the thing that fluctuates and always fluctuates upwards due to cost constraints or what the insurance is actually asked to give. In Georgia, over the last 4 years, say since 2000, actually 6 years, since 2019, the insurance rate alone has gone up 36%. Now, year over year, from 2024 to now, insurance rates on average have gone up 12%. It is $70 higher here in this state than it is nationally. This is a problem for this state. What we're doing to address that is identifying what the insurance companies have identified as the reasons why the rates are going up so high and so quickly. Insurance companies basically adjust these rates based on the cost of what it costs to rebuild after major events like storm damage. Now, anytime you file a claim, you personally are going to pay higher premiums. But those costs are not just going to be for you. Everybody in that state will be affected by these rates. These are one of the three main reasons insurance companies raise rates. The other is the cost of materials to rebuild. And the final being underwriting losses. Basically, when the insurers are faced with higher underwriting costs associated with getting you insured in the first place. This is kind of a catch 22 because you're paying insurance just in case something goes wrong. And whether or not something goes terribly wrong with your house, like a fire or a natural disaster, you're going to be charged more if you file a claim. And that's just the game being played right here. The only silver lining to any of this is that this state has realized that there is just a runaway freight train when it comes to these rates. There's just no end in sight. It has not gone down in my time here as a homeowner in this state. But what they were attempting to do here in our state legislature was pass a bill that addresses the insurer's concern. It didn't take our concerns into consideration eh, because we're not squawking loud enough. But basically, what happened was Senate Bill 68 and 69 in Georgia passed. This was basically billed as a tort reform, capping the amount of money that we, the insurers, can receive if we ever have to file a claim or sue our insurance company to get our money that we've been paying into this insurance thing. It's kind of a nasty thing towards us, but the goal is to eventually have a rate reduction. We're looking at possibly a 3 to 5% rate reduction in our insurance in this state. This is to kind of offset the runaway cost that's already been plaguing us. I myself had an increase of over $2,000 in my annual housing expenses. Though my principal and interest, the first part of the mortgage, it went down. Over time, the amortization schedule, interest, More of my payment is going towards the principal than going towards the interest of the loan as we're drawing down. That's great. So that rate is pretty much set. However, property taxes, as a result of these insurance rates going up, also went up. Now, even with property taxes, the local government here and our sheriff's office dropped that rate due to millage, which means basically we saved about $200 a year. Great. What are some other ways that you can save on the insurance piece? Well, we're going to get into that right now. When it comes to insurance, the biggest saving grace that you have is to look at your policy first and see what you're actually paying. Now, what I had was an opportunity through my job to shop around, and they gave me rates based on what I was currently paying. At the time, it was close to $4,000. Now, this wasn't yet a $300,000 structure, but it was some things baked into my original plan that I didn't pay attention to. The main one was actual cash value versus replacement cost value of a new roof. One of the biggest drivers of your insurance rate going up is having an older roof on your home. Now, with actual cash value, you're not getting the full replacement cost. You're getting a depreciated value of that replacement. So if anything happens to your roof that you need replaced, you're going to get a depreciated value of that roof. I had like a 7 or 8 year old roof. Closer, actually, let me stop lying. It was over 10. After 10 years, that roof has got to get replaced anyway. But even with my $2,000 deductible, the most I could get in insurance help replacing that roof was about $3,000 to $4,000, leaving me with a $9,000 gap that I'd have to come out of pocket in addition to the $1,000 deductible. It's insane. You might as well pay the additional money and pay it out of pocket versus filing a claim. Now, with replacement costs, you pay your deductible, whatever it is, and the insurance company pays the rest. And that's the biggest driver. If you have an older roof, your insurance rates are going to be way higher than what it should be, in the tune about $1,500 to $2,000 a year in extra insurance costs. So that's one way to drive down those insurance costs. The other way, obviously, is shopping around. What I found doing that ordeal with my company's sponsored counseling on my insurance rate is I could get and did receive a policy that had a lower deductible, a higher coverage amount, and replacement costs. My premiums, my monthly expenditures actually went down to what they were going to be risen to with the old company. So we talking about a $700 difference in annual payments to the insurance company with more coverage. This significantly affected what I was going to have to pay out towards insuring the home. These are the kind of tips that you need to be looking at, because there's nobody who's going to be a better advocate for you in your situation than you are. Get to know those costs and drive that down. That's $2,000 a year difference that I'm paying less of that can go towards my other investment needs. Definitely take a look at that. Try to combat some of the things that's going on. Look into your own state government. See if you have some tort reform going on, like we do here in Georgia with Senate Bill 6869. Now, this is supposed to help out the insurance industry so that they in turn pass those savings on to the insurers, we the people. Whether or not that's going to happen is a wait and see, like it usually is when it comes to money that is due us. But make sure you know what you're getting into. I've got a wait and see attitude towards this. With these 36% increases over 6 years and that 12% increase in insurance costs alone year over year since 2024, something's got to be done. Let me know what you think in the comment section below, and I'll talk to you later.